All right, Hovnanian Enterprises, New Jersey's largest home builder, just coming out with quarterly results. And joining us to break down those results is Stephen Kim, senior analyst of global real estate at Alpine Mutual Funds. By the way, Alpine owns shares of Hovnanian in select accounts. Let me ask you, as a stockholder here, what do you think about the numbers? They missed the street's estimate.
Yeah, the street estimate was, depending on who you talk to, I talked to a number of people, the street estimate was incorporating, in many cases, impairment charges that were very significant, but not as significant as what they actually reported. Most of the people that I talked to were looking for less than $100 million in impairments.
Are these land impairment charges?
Yes, exactly, where land values devalue, and therefore they have to write them down. And they came in at 105, so a little bit worse than people were expecting. The orders were a little better than most of the analysts' printed figures. However, all of the analysts I talked to, when they gave me their order figure estimate, they said that they expected the number to come in higher than that. So
the stock, looking at it after hours, down 6.5%.
Yeah.
What's everybody reacting to in your view, Steve?
I think basically, well, first of all, the headline number is something to take note of. This impairment charge has a very, very heavy influence on your reported number, right. And it also, frankly, degrades your equity. I mean, they lost money again. Builders have been losing money pretty steadily, but this is a company that doesn't have any equity anymore. So it's a problem.
There's another headline that caught my attention. They say the covenants will limit their ability to repurchase more debt. Do we need to be concerned about that?
Well, I think that's something that I think most people already knew. The headline doesn't sound very nice. I don't think that's terribly incremental, but they repurchased what they could. Their cash balance at the end of the quarter is, I think, in excess of $500 million. It's not as good as it was last quarter, but, you know, they paid down some of their debt and they bought some of their debt back. I don't think that's a big factor.
You mentioned the stock's been volatile, and we've seen it drop. It was closed at $5.60 on Friday, and now all of a sudden it's trading for $4.30. Why is this stock so volatile right now? Is it just an easy bet?
No, I think what's going on is that there's some insolvency risk being priced into the name, and you get this is still one of those names that if the housing market were to take another leg down, it would be vulnerable due to its balance sheet. And I think that's something that weighs on the stocks, gets people who are bearish to get particularly negative on this name. And on the other hand, if you're of the view that housing's recovering and things are going to get better, Hovnanian's going to probably skate through this just fine.
Can I just, because you say vulnerable, what do you mean when you say it could be vulnerable?
Well, they still have a fair amount of debt outstanding, and and obviously they're not making money on homes that they are building on land that they own.
Right.
So you really need to see an improvement in the market, which you're starting to, but you need to see that continue to feel good that Hovnanian, frankly, can be a self-sustaining entity going forward.
Let me ask you, you just got off the phone with management there. Is this situation weighing on management? How do you think they're dealing with it?
Well, I think they're handling it as professionally as you would expect. I mean, this is a company that's been around for decades, and they've been through tough times before. This is probably going to be one for the record books. But no, I think they're doing everything that they could reasonably be expected to do. The only thing that I didn't see in the release that I was looking for was some mention of the drywall impact. This is something that we've seen other builders take charges for. Chinese drywall was something that came into the country in around 2005, 2006, following Hurricane Katrina, where you basically had a shortage of drywall. And particularly in Florida, and Fort Myers was an area that you saw as the epicenter of where there was a need for drywall, and it came in from China, and hence, and subsequently, you have seen some charges taken because that drywall is defective.
I'm doing a search here on the press release. Nothing's coming up.
No, and I talked to them. They haven't taken a charge on it.
Got it. Steve, thank you as always. Appreciate you breaking it down. Steve Kim, everybody, from Alpine.